So yesterday was one of those days where the market basically said higher yields, higher oil prices, and expensive tech stocks. Yeah, maybe let's take a little step back. Hey everyone, it's Wednesday morning, May 20th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's get started. U.S. stocks finished lower as Treasury yields pushed higher again, and tech stocks continued to feel the pressure. The Nasdaq Composite dropped 0.8% after being down more than 1% earlier in the session. The Standard & Poor's 500 fell 0.6%, and the Dow Jones Industrial Average also lost about 0.6%. Now the big issue was once again the bond market. The 10-year Treasury yield moved back above 4.6%, while the 30-year yield briefly touched 5.2%. And that matters because higher yields make life harder for growth stocks, especially for those expensive artificial intelligence names that have carried a lot of the market this year. The reason behind the yield move was pretty clear. Inflation worries are back. Oil prices continued to rise after blockades in the Strait of Hormuz created fresh concerns about energy supply. And when oil moves higher, investors immediately start asking whether inflation could stay hotter for longer. That also brought the Federal Reserve back into the conversation. Wall Street is now debating whether the Fed might even have to raise interest rates again to bring inflation under control. That would be a real problem for growth stocks, and especially for AI stocks with very high valuations. There was, however, a small positive signal on the geopolitical side. President Trump said on Monday that serious negotiations were taking place and that there was a very good chance of a deal on Iran's nuclear program. So, markets are watching closely to see whether that helps calm the oil market. And then, of course, all eyes are on Nvidia later today. The company reports earnings and expectations are extremely high. Nvidia has become much more than just one company. It is now basically the key test for the entire AI trade. We also had important numbers from Home Depot yesterday. Sales grew 4.8% to $41.8 billion, beating expectations. But net earnings fell 4.2% to $3.3 billion. And diluted earnings per share declined 4.3% to $3.30. The company kept its full-year outlook unchanged and still expects sales growth of around 2.5 to 4.5%. So, to sum it up, yields are rising, oil is creating inflation fears, tech is under pressure, and Nvidia now has to prove that the AI story still has enough fuel. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.